There we are. Hello, everyone. Welcome to Stock Unlock Podcast episode 62. I've been doing this for well over a year. You might recognize Daniel Pronk. He has over 250,000 subscribers up in Canada, covering investing content. I am his loyal co-founder without a big following, more of the tech guy, as we like to call it. Markets are going absolutely AWire today. It feels like things have only been going up. We're going to lightly touch on HIMS, but you will be able to find a more in-depth video on Daniel's YouTube channel for that later. I'm going to make a very small bull case for LYFT just for the sake of discussion, which I think could be interesting. So we'll get into that a little bit later. And of course, we got our eyes on the chat. Andrew, great to see you. So we will also be looking for your comments as well. It's great to be live with you. Daniel, how's the weather up there? You've been going through a cold spell up in Canada, I think.
Oh no, it's getting better, man. It's plus 7 degrees Celsius here now, and I can wear a t-shirt outside again. Yep, it went from like minus 40 to plus 7 in within 48 hours.
It's almost as volatile as the stock market.
That's right. So I was actually looking on X before we started this stream, and stocks were pretty negative today. But then I noticed that they kind of like took another dip. They were kind of leveling out, but then they took another pretty big dip. And I just saw news that apparently stocks are continuing to fall after China reports a new coronavirus with pandemic potential. So it seems
not
like
ready for this.
Yeah, so it seems like the market is maybe well, it was initially reacting to some inflation news, and then it reacted further to this news that China put out that, hey, might be another COVID coming out. So that's great. That's like brand new information, though I have not looked into that. I saw this like 5 minutes before we came on. But the other news on why the market is down is because apparently inflation came in hotter in the United States, and this is pre-Trump trying to impose tariffs, which he delayed until March on Canada. So, if inflation is already running hotter in the US than they want, then it's like, should he really be placing tariffs on all essential commodities? Who knows? So the market's just very uncertain right now. People are a little upset about the higher inflation, and uncertainty with Trump is kind of his thing.
Do you know what the print was? Like, was that like a CPI number?
I did not have time to look into it further than the headlines, unfortunately.
It's all good. Well, you've looked into it more than me because I wasn't even aware of that. I'm going to respectfully ignore the COVID thing. Just
yeah, that's kind of crazy. I really hope that's not true.
Yeah. Well, moving on from that one. I know that you have been talking about HIMS a lot. I also know before the show you said you do have a video coming out on your channel later, so we're going to keep it pretty surface level here.
Yep.
But one thing that I found funny, I'll share my screen again to show this. I get really frustrated, I think, when people online start like complaining about huge, quote, dips. And I think it's mostly to get payouts on social media for like bombastic posts. But like, let's just look at the last month for HIMS. I understand it's down 23% today. I'm not trying to downplay that objectively. That's a lot to be down on the day.
Yep.
Can we also like acknowledge that even with the stock being down 23% right now, it is up 76% and still almost a double on a 1 month price change. This is the amount some stocks move in multiple years that is still considered to be a market beating return. So yeah, it just pisses me off when people start like crying about this. Like,
yeah, it's what I'm going to discuss in my video later as well. Is I'm going to draw a chart in Photoshop really quickly where, you know what, I'll do it right now. Can I share my screen?
Yes. I'm just laughing because we were talking about not going in too deep and I heard you like on the ledge. It's like, we're just going to do the chart live. I love it.
Yeah. Because
if you're with us in the live chat, let us know if you want Daniel to do this chart.
Yeah, because you guys are going to see some Photoshop stuff maybe. That's okay. I got nothing to hide. All right, let's create a new document. So this is exactly what you're talking about right now, Jake. So let's say that this is the stock chart of HIMS.
Oh, I know what you're doing right now. Didn't Joseph Carlson like troll Amit on this morning?
No, that was like yesterday. Okay, I got everything proper. So there's the stock chart. Let's say that as you saw, HIMS went like this, and then it like went like this, and now it's like down like this. And this right here is causing people to freak out. All right. But the thing is if HIMS just went like this, sorry, let's just continue from here. Let's say that HIMS just went like this with no bump, and now it's still at the exact same spot, but it didn't do this. People would be so freaking happy today. So it's exactly what you're saying. It's like just because it's down or it went up and now it's down a little bit, people are upset. But if this big bump didn't happen and it was still right here up 76% and it was just smooth up, no one would care. And I find that so funny about the market. It's like when you zoom out and put it in perspective, like I'm still up almost 100% on my HIMS position, like in a month. That's ridiculous. So I think people got to relax a little bit. Also, like this is just a volatile stock. Just go look at it at its history. It routinely has 20% drops. Like this is normal. Okay, you can't get into HIMS stock and be like freaking out about this because this is just how it is.
I freaked out on the other side, and I think that's like a good preface to your video that's going to come out later. I think all you guys already know who Daniel Pronk is, but you can see that video come out there. Yeah, I felt this on the reverse side because I bought a few shares. It was a pretty small position. I was actually planning on building it up a bit around $24. And let's see, I can bring up my portfolio here. I know I'm not sharing my screen, but yeah, I came out with a quick like $250 gain, which is honestly nothing, but it was an 80% gain in 5 weeks. When I bought this stock, like I understand the business, I like it. I think there's risks involved. We don't need to get into that. I think people are really underplaying, not understanding the regulatory risk in the US. But anyways, the risk reward compared to their fundamentals, as you already explained in your videos, like I went and did my own research. Like, yeah, this looks great. Bought it. Couldn't keep building my position because it ran so fast. And then it went up to 80%. I'm like, look, this might run another 100%. Like I might miss out on that. But this is already more than I was bargaining for. And I'm not super highly convicted on this stock to hold on to it. Very different from your mindset. So I took a quick gain on that. Obviously, the stock kept running, but no one's ever going to convince me that I made a bad trade by making 80% in 5 weeks. Now, I will agree that if I had held and magically knew where the top would be, sure. But if I could read the future and I had a crystal ball, I think I'd be on Mars right now or something. So I agree with you. The psychology games are funny. And speaking of, I don't know if you want to segue to another topic here on LYFT or if you had any more to say on HIMS.
Not really. Nope.
Cool. Well, you're talking about Uber. Everyone's talking about Uber. I think everyone's familiar with the bull case of Uber. And in our Stock Unlock Discord, there's a very, very heavy bull crowd of Uber investors, typically people who came in around the $60 to $70 range.
Yep.
This conversation is actually more meant to be about Lyft, but just taking a step back, like Lyft and Uber are both the two players in the ride sharing network today. Uber is obviously winning. They have more market share. They have more cash flows now, and they are just winning. That being said, the ride sharing market is growing. And if you are someone who believes that the autonomous vehicles is only going to augment that for these companies, huge debate point, but stay with me here. If you believe that, you are in a very, very big growing market. And in the sense that a rising tide rises all ships, I started looking at Lyft stock. What I'm going to share, I guess, is a narrative of a bull case. But just to let everyone know, I have not bought this stock yet. I don't have a plan to, but this is just meant to promote conversation. So I'm definitely going to take more of a bull stance on this. But that is kind of my disclaimer. So as people come in later on the stream, they'll think I'm some crazy Lyft bull, but that's their loss. Also, wow, we really have viewers from around the world here. Looks like we have a lot of people from Europe, probably because we're doing this during work hours, US time.
But that's okay. I also saw that Grab, like randomly over the weekend, last weekend, Grab just started popping up all over Twitter and X, and everyone, well, not everyone, but the majority of people randomly seemed extremely bullish on Grab, and it came out of nowhere. So yeah, I think people are just looking at this industry right now after Bill Ackman took a position in Uber and whatnot.
Sorry, just context for me and other viewers. Is Grab involved in ride sharing? Is that what their business is?
They're the number one in Asia, I believe.
Okay.
Like when I was on my Asia trip, it wasn't Uber. We were taking Grabs everywhere.
That makes sense. Let's put a pin in that because I also want to throw Oscar into that mix where I think that there's a new roaring kitty, and I actually met him in New York City the other day that I believe is responsible for all this Grab mayhem in a good way. It's Amit Investing. If people know who I'm talking about, actually friends with the guy. He's a good person. Anyways, bringing us back on track here or on wheels, since we're talking about cars and not trains, I'm going to talk about Lyft for a little bit. We've had some new people join. This is just going to be a bull case for Lyft. Just understand that I am taking that role for this discussion, and I personally do not have any vested interest in this stock as of today. So Lyft, they've been losing to Uber, but they're the other main player. As you can see, their stock performance has been nothing short from atrocious. It has completely eviscerated shareholder value, and we're going to get into why that is here. As you will see, the stock currently is trading at a $1.6 billion market cap. It did take another fall after earnings. Let's just make this a little bit smaller here. So you can even see in the small band, the stock is pretty volatile. It currently has roughly a 13-14% free cash flow yield, which is pretty, quote, cheap for stocks that would be considered growth. And of course, you want to ask yourself, well, is this a growth stock? I'm going to make the case that it is. So let's actually dive into their insights here just to get like a top level view of what's going on. Another thing to keep in mind is Lyft had a new CEO come in a few years ago, and that's going to play into my bull case here. I did listen to the last earnings call. This is more than just doing like 10 minutes of research. I did actually spend a couple hours like really taking a dive here. The company has a lot of stock-based compensation. It's going down. We'll get into that, but that's part of the reason why the management score is so low. And historically, this stock has destroyed shareholder value. I'm not trying to sugarcoat that. Anyone who's invested in the past few years has gotten absolutely their butts handed to them, unless if you got really lucky timing a low on this one. The stock as it stands today is not super profitable. They actually just flipped to GAAP financial profitability within the last couple quarters. As you can see, they are growing. I think that this is enough to call this a growth stock, which I'm going to put air quotes around because you want to measure pre and post COVID. Financial health, iffy. Analysts love it. I don't care what analysts think, and I'm not huge. We're going to redo the evaluation score soon, but I digress. So kind of like mixed signals here. The overall stance that I'm going to take on this is that Lyft is turning it around with a new CEO. They made tons of F-ups in the past, but there's a lot of strong reason to believe why I think this has more of a potential to be a multi-bagger than Uber based on its current valuation within the next like 3 to 5 year time span. As you can see, the stock has been operating quite unprofitably. So we're going to go and figure out, where all that money was coming from to build this business. But as you can see, their revenue has been growing fairly nicely. And if we want to put this into the post-COVID timeframe, the CAGR on the revenue growth is over 30%, which is very, very strong. The one thing that is really scary to see is in terms of where shareholder returns go to die. Up until the last quarter, they have been diluting to raise money. They have also taken out debt, which they have started to pay back down. So when I looked at the stock about a year ago, I noticed that they had over $1 billion that they had taken out debt. I actually looked at this stock earlier in the year. I was like, they're unprofitable. They're taking out a ton of debt, and they're diluting shareholders, and they're losing to Uber. This is a dumpster fire, is what I thought 9 months ago. Objectively, I think I was right. So anyways, they have taken out debt. They are starting to pay that back down. If we look at their cash position, they actually are producing positive operating cash flow and positive free cash flow even after stock-based compensation adjustments, which is very nice to see. And you can see their cash position has stabilized. They have been able to start paying down some of their debt. And I actually have reason to believe that they are actually going to start to correct this very bad runaway share inflation here, which no investor really wants. Heading into their cash flow statement, this is something that I think is really cool to look at. And Daniel, you and I really took a dump on Uber when 2 or 3 years ago, they looked like this. And I actually brought Uber up. Now, please notice that I have not scrolled this all the way out. Like, just look at Uber right here. I don't think that this is a coincidence. Whenever you build a network business like Uber or Lyft, they have a very unique way that they need to build out their platform where you need to flood money and new drivers into a new region. And you need to hit a critical mass of drivers in order to drive the wait times down to an acceptable point and also have elastic supply and demand economics on riders and drivers in order to make that network work. You can't do it if you don't have above that critical mass. And Lyft, just like Uber, has had to spend massively, and they're also playing catch up with Uber. Now, I believe Lyft is about to have their Uber moment, where Lyft has actually flipped to profitability recently. They just announced a $500 million share buyback, which I actually have mixed feelings about, but it is nice to see that they are starting to keep shareholder returns and share count in mind. They are able to afford this based on their cash position while still being able to invest in the business. One, because they have the cash position to do that, but two, because they're actually making positive operating cash flow. And that is also taking into account stock-based compensation. Stock-based compensation was way out of control. It's going down. And if you listen to the earnings call, they are managing that way better. And finally, here, what I want to show you is for all of their key performance indicators for active number of riders, numbers of rides, gross bookings, those are all going up. The last things I'll share here, Daniel, is on the earnings call. I found it very interesting that the Lyft CEO said that they did not see any market share loss in the markets where Waymo was coming in, even though Uber did see market share loss. I am not sure what to think of that. They talked a lot about how they were positively incentivizing drivers and giving them a fair revenue share, which is better than Uber, which is now having them see all their internal metrics for numbers of drivers on the network, how engaged all their drivers are, and the driver satisfaction going up. I'm not trying to say at all that this means anything bad for Uber. My bull case here is this stock's turning it around. Now might be the time to get in. Not financial advice, just playing the bull case here. And there's room for two players in these markets. Lastly, my bold prediction is I think that this is a huge takeover target for a lot of big businesses that are going to want to have access to this market, or another autonomous vehicle driver. For example, Tesla could come in and buy Lyft. I think Amazon could potentially come in here. I've always thought that Airbnb and Uber would be a good merger. I could potentially see that with Lyft, but would be a little bit less happy about that until they prove more scale. So I'll finally shut up because that was a long thesis. But I think that there's something here. There was one red flag that I could still bring up, but probably a good time to open up for comments from either you, Daniel, or the chat.
Yeah, I have not looked at this stock, so I don't have a lot to say.
Do you want to buy it now after my pitch? Just sell all your Brookfield and throw it all into Lyft?
Oh yeah, let's do it on stream. No, definitely not. I think for me, this stock-based compensation is I get it's coming down. Yeah, it's probably okay.
Yeah. So they have a lot of rolling vest schedules that they need to honor from past grants, but they have lowered the grants a lot, and you are starting to see that. I agree, it's pretty high.
Yeah, I'm also noticing that its margins are actually like pretty similar to Uber right now. Gross margins pretty much the same. Free cash flow margins almost the same. The revenue is actually growing faster. So, I mean, at a 7 price to free cash flow, which is a basically 14% free cash flow yield. I mean, yeah, you're right. The stock is not pricing in any future growth, in my opinion. Like if they held cash flow steady, that's still a very good return. So yeah, I don't know. The market could be wrong on this one. Definitely looks like it's not pricing in any future growth. So
yeah,
could be interesting.
When you start peeling under the covers here, that's where I start to get a little like iffy. So for example, I'll share my screen here. They increased their marketing spend this last year. I didn't run the numbers, but it looks like about 80%. I'll scroll down to get it here. Yeah, so let's look at this line right here, sales and marketing. Daniel, I saw you do this on HIMS, and I've done this before, but it's now becoming more of a regular part of my analysis for like consumer facing companies, basically being like, how much are they spending? How much are they spending on sales and marketing? And then is that increased in spend materializing in revenue growth? it gets a little hand wavy because sometimes when you do brand recognition marketing spend, it's actually not for immediate revenue growth. So this isn't like a hard tell, but I wasn't a huge fan that it raised from 481 million to 788 million, but it did not result in nearly that percentage increase on the top line for that spend. So I'm a little skeptical on how much they can use their capital to grow efficiently. So I'd love to see that marketing spend get more efficient. Obviously want to see them start to build more market share, but even if they remain a number 2 player, like you said, Daniel, the cost versus risk right here is, it seems like there's a high margin of safety. Like the business, they're not going out of business. They have tons of loyal customers. Their customers are growing. They're flipping cash flow positive. They're starting to manage their negative things right. Like the stock-based compensation was an issue. The debt, I think, was an issue. And when you find these things in the market, like the time to buy Uber was not now. It was 2 or 3 years ago. And I'm just asking myself, like, is Lyft about to have its Uber moment?
Yeah, it's definitely not in the news. Like everyone's excited about Uber right now. I don't think anyone's looking at Lyft. Yeah, on that marketing spend thing, I also wouldn't just look at the top line growth. What I did for Hims is I look at the marketing spend versus gross profit growth, not just top line. So that'd be one thing I would do. And yeah, I don't know. Looks interesting to me. I'm not super, well, I'm not even really interested in Uber. I just don't think I want to be in this industry. I don't feel I don't know. When I invest, I have to have the gut feeling, I have to have that conviction, and I just don't have it in this industry. So it's not for me, but I see why it's interesting.
So you weren't ever going to own Uber either, or was there like a price for Uber? You just wasn't feeling it?
I mean, there's a price for everything. If Uber was trading for $100, I'd buy the whole company. But
Fair enough. That's where I'm at with Lyft. Like, for example, if Lyft went to like a 20% free cash flow margin, sorry, not free cash flow margin, free cash flow yield, it would be hard for me not to scoop some up. But
yeah, no, I understand. Like I recently bought a small cap oil company because it has a 20% free cash flow yield that's growing, and I was like, this is just stupid. So I bought it. So, I get it.
love it. Any fun inside information to share about the Stock Unlock mobile app?
Oh, it's going to be beautiful.
Yeah, just to quickly tee this up, we're really doubling down as a business this year. We've got a team of 7 people, really making a super big stab at hunting more viral growth. I'd say our main issues today is just not enough people know that we exist. So we're supporting the company barely and spending a little bit into growth, and part of that is a mobile app. Daniel is kind of like the brainchild with our user experience designer named D, who has been designing this. So what can we look forward to there? I mean, what's the experience going to be like? Is it going to feel exactly like I'm holding Stock Unlock when I open up a web browser today? Is it going to be sock unlock? Like, will I be able to get socks? What's happening there?
Yeah, the app, when we launch it, it's going to be a little bit of a lighter version than Stock Unlock, the desktop app today. Like the freeform tool, DCF calculator, probably not going to be included immediately. The goal is really to just get it out as quickly as possible, but also still have it be extremely useful. So we're focusing on portfolio tracking, showing off the Stock Unlock insight scores, and having watch lists, and then also just stock details pages. So you can actually look at a stock, its dividends, key metrics, financials, whatever, all that stuff. And that's pretty much going to be the V1. And then we're going to do what we do and build well over time. But yeah, we're starting from the ground up. It's actually been a lot of fun because we're not, sorry, I just read a comment. We're not taking what we've built from Stock Unlock and just copy and pasting it into the app. We're actually starting from the ground and thinking about every single decision with no historical bias. So it's like we're building a new platform. And I think some of the ideas that we've come up with are actually going to make their way onto the desktop app over time, because we're coming up with some pretty cool stuff. So I'm excited about it. I'm excited to get the app out and let people track their portfolios much more intelligently on the go. It's going to be great.
Yeah. I was talking to one of the engineers on the team today, and a huge conceptual difference that feels amazing is many people don't know stockunlock.com. Now it's a colorful product. We have different pricing tiers, thousands of users, all that. It obviously did not start out that way. It was a little side project. We did not even realize that a big business would form around this. So there was never a first principles like intelligent design that went into stockunlock.com. It kind of just naturally grew from a hackathon project, and then like over time we improved it. The mobile app is exciting because, as Daniel says, like first principles, reimagining, like what do you actually want to see when you're getting stocks on the go, push notifications directly to your phone. And existing Stock and Lock subscribers will benefit from all of this within their existing subscription package, which is obviously great. So we're continuing to add more value there. Anyways, not seeing too many comments about that. If anyone has questions in the chat, let us know. Daniel, you want to take one of these comments? It looks like we're getting some pretty good questions from the past conversation we just had.
Okay. This one from David says, when you differentiate that marketing is a drive for company growth versus being the only that sustains a company.
A little bit of a typo in there, but
yeah, I think maybe some typos in there. I think the question is basically asking, how do you differentiate that marketing is growing the company versus only sustaining it? I would say, well, in my HIMSS video that I did for my Patreon, what I noticed was Teladoc, for example. I was comparing the financials of the two companies, their income statements. And with Teladoc, they were spending something like $700 million per year on marketing, and the revenue was flat and declining. So in that case, they're spending $700 million on marketing, and it's not growing the business. Whereas HIMSS, I don't remember the exact figures off the top of my head, but it was, I don't know, let's say, I'm just going to say like $400 million in marketing. Probably not the right number, but they would spend $400 million on marketing. And then over the next year, their gross profits would increase by like $500 million. And that's not revenue, that's gross profits, by the way. So when you take a look at how much did they input to marketing versus what did they get out, it was $400 million in to marketing spend, $500 million out in gross profits that they could then use to continue marketing. So how much does HIMSS need to spend to sustain the business? I have no freaking idea. All I know is they're spending as much as they can to grow the business. And I personally think it's paying off massively. So I want them to continue doing that. And with Teladoc, it was a completely different story. $700 million in, no growth out, major red flag.
I've got a question for you for my own understanding. The concept of comparing it to gross profits as in addition to revenue as another line item, am I wrong to think that the costs you take out of gross profits are like fixed costs? So like for us, it would be like the cost for the financial data API. So how are those costs related? Like, wouldn't there be other costs that aren't influenced by marketing that will change the gross margin? Like, am I understanding this correctly, or does that like come into play when you think about like the gross margin changing versus just the top line revenue? Because there might be like fixed cost line items that shifted that weren't impacted by marketing for the cost of goods.
Yeah, I don't know how to answer your question. What I would just try and frame it as is what matters is profitable growth. What creates shareholder value is profits growing, not revenue. So if a business puts in, let's say, Oatly was actually a really good example about this, and I wrote about this in my book, actually. Oatly put in something like, I don't know, let's say $400 million of marketing again. Their revenue grew by, I think it was like 300 million. Or you know what, for an example, let's say their revenue grows by 500 million. But let's say their cost of goods sold does not increase at all. Or sorry, their gross profits don't increase at all. Then it's like, did the marketing actually benefit anyone? And the answer would be no. So marketing it's an expense that's paid from the gross profits. And I think that's why I would use it there, is because it's an operating expense. So it's not paid with operating income. It's not paid with net income. It's paid from gross profits. So I want to see the marketing expense grow gross profits. And that was kind of my reasoning.
Appreciate your knowledge, sir. Let's go to the next question here. When is the app releasing? We do not have a release date set. I believe we should be testing it by or before April. And if you are one of our beta testers, which is a kind of like private beta testing crew of subscribers, we are going to be privately testing this with some people. If you don't know what that crew is and you want to become a part of it, just send us an email to support@stockunlock.com, which I'm sending in the chat. We see all these emails. They'll be triaged to us. And you could just say that you want to join the beta testing crew. You just have to be a paying subscriber and be accepted by us. And then you might be able to use the app as a tester. Just know that if you are in that group, we do expect feedback. It's not just kind of like a freebie thing. We obviously test to find bugs. So if you aren't interested in that, no hard feelings. No freeloaders.
I think we've actually kicked people out of the beta testing group because they were in there to kind of get like free early releases to features without giving us feedback. And it's like, it's not why you're here.
I found them. Some people, I didn't kick them out in the right way though. Cause I was like kind of blunt about it, just like not thinking about emotions. And then people were like, yo, sorry, like I have a job, like in real, and I was like, okay,
Yeah,
okay, like I'm sorry. So
yeah, we're also
it's more
not.
of like a hand wavy thing.
Andrew says the DCF is huge. I hope it's included soon. I think this is in regards to the app. Yeah, so I think the DCF will be included long term, but the goal is to get it out as soon as possible and then start getting feedback immediately. So we're not going to build it in right away, but if we get 100 people like, well, where the heck is the DCF? And if that becomes the number one thing, then it's like, okay, yeah, we should probably put that in pretty soon.
You can use Stock Unlock today on your phone. I know Daniel's going to laugh his behind off here. You can use a mobile web browser. Stock Unlock works very well in the mobile web browser. Maybe you are already doing that. I have learned the hard way that no one's going to save a mobile bookmark on their phone. And Daniel and I have had much pain from my poor decisions around this. But native mobile app is coming. Just know that if you do want to use any of these on the go, it does work today. You just got to open up a web browser. It is amazing how many people from around the world are in here. I'm seeing Spain. I see Morocco, Germany, Montreal, Vancouver, Brooklyn over here, Germany, Netherlands, another person from Spain. Shout out to all of you. Thanks for hanging out with us on this Friday. Daniel, do you see any more comments here? I guess Airbnb did report earnings. So since I kind of feel like I'm the resident Airbnb bull, if anyone's curious to hear my thoughts on that, I'm happy to share. But at the same time, I feel like I've done enough talking with the LYFT presentation today.
I do see one more comment that I think I can answer. I see one on Nubank, but I have not taken a look at the earnings, so I'm just not going to be able to provide value there. Andrew's on fire today. What are your thoughts on PRL and Go Easy? So Jake, PRL, I don't know if you remember, but when we were in San Francisco walking around that one day, I told you about that company that I looked into that was growing ridiculously quickly, but it offers loans at like 130% interest rates. PRL is that company. So I think that this company is obviously growing very quick, but I think their business model is just too dirty for me to get behind. And I know I try not to put morals into investing too much, but that one, as I said earlier, I have to have the gut feeling behind it. And like that one, I just don't. Also, I was reading, if you go on X and you just type in PRL, you can like see some people's prior analysis to the stocks you're looking at. It's actually very good to do. And I found that someone did some intelligent math where PRL actually has something like 30% loss rates on their loans. Like it's ridiculous. And if they weren't growing revenue, they would actually be unprofitable, like significantly unprofitable. So basically the company's story right now is they have to continue growing at a fast rate to maintain profits and make it look like they're doing a good job. That was kind of the summary of what the person said. So I don't know, looked sketchy to me. And I didn't look into it further than that, but I was just like, damn, the math looks right there. So yeah, I'd look into it.
I think another way to have this conversation, like taking emotions out of it more, because I do agree with you on that comment. I was listening to a podcast the other day. I don't know if anyone knows who CoffeeZilla is. He does a lot of like debunking on YouTube. He's great. He's not like in the investing space. I think he did bash some investing YouTubers.
Yeah, he did
recently pretty hard. But he was uncovering a lot of the grift that happened with this Libra coin, the latest in the news meme pump and dump that unfortunately got really big. And the person who he was interviewing actually was confessing to a lot of real crimes. Like, this person's probably going to go to jail, but one of the quotes this person said in terms of why they were, and by the way, this person is someone who is in their 20s, has $110 million plus from grifting and basically stealing and doing fraud in crypto. Seems like someone who got caught up in it and is feeling really guilty. I'm sure that there's a lot of people that want this person dead now, but anyways, what they said really stuck with me. And I'm going to tie it back to that conversation we were just having in a sec. It was that crypto projects in general, the concept of a cryptocurrency coin and building that implementation of blockchain products, is by default a value extracting business. He went on to say that there are tons of companies who are crypto companies, and you'll have the founders kind of talking about community and all this other stuff. But he basically waved his hand and said, look, you can't argue around this. It is a value extracting company. They are not adding value to anyone. They're selling you on a dream or a community. There's no tangible product there. It's similar to owning gold or something, right? Where it's everyone just has to kind of believe in gold that hard because it's a non-productive asset. And it just really made me think about this company that you're talking about. They're sending out subprime loans to very vulnerable people who are very poor and down their luck. And we can call it what it is. They are taking advantage of poor people and extracting even more money from them so that they could squeak out some profits and try to make themselves rich, and not really give a crap that some large percentage of the people they're working with either already are or going farther into financial ruin. I think that's a value extracting business. Let's take emotions out of it. Do businesses generally do well long term that are only extracting value? No.
Yeah, no, that's a very good way to put it.
So yeah,
yep. No,
that's where I'm at.
That's a very good way to put it. Now, on the flip side, a lot of people say the same thing about GSY, which is what Andrew was also asking about. To go back to your comment, Jake, I would actually argue that GSY is a value creating company, because
can you just say what it is quickly? GSY?
It's a subprime lender as well, but their average interest rate is around 33% today, which is still high. But you have to know that they are lending to subprime people, and they have a competitor down in the United States. I did a full video on GSY. I did a deep dive on it. And they have a competitor down in the United States who clearly said if we offered 35% interest rates to our customers, we would go out of business. That's just how risky these lenders are, or the customers are. So the fact that GoEasy can offer 35% or 33% loans and maintain profits is actually a testament to how good the business is, because their competitors can't do it. So they've figured out how to do this extremely profitably. Now, what they also do is they work with the subprime lenders, their customers, to get them out of the subprime lending or to improve their credit scores so that they can actually graduate to lower and lower interest rates over time. And I think it's something around over 50% of their customers graduate out of subprime into prime. So they actually work with them. So I think that's creating value.
Yeah, I was about to call you on your bullshit until the last part of that, where I'm okay, so it's actually good because they do it profitably. But that last thing I think buttons it all together, where they're not just giving 33% is insane. It's
high,
not a good financial instrument. But but to your point, you can't really lend people in that category money at any other rate. And I actually think that that's pretty awesome.
They're competitive.
They're actually really trying hard to help their customers. And then even in terms of the business, I'd imagine that those customers are forever going to be loyal to them, as opposed to all the other players out there that are really continuing to extract value, I guess, to your point. I'll have to think about that one a bit more. It's I see your side. I see where you're coming from. I think it's a fair point.
No, and the reason I brought up that their competitors can't even offer 35% interest rates profitably is because I think I actually just lost my thought.
The other competitors who can't make a profit off of charging.
Oh yes.
Loan.
These customers are risky, and you're in business to make money, right? Let's not sugarcoat it. Every business is in business to make money, drive profits. So I I don't think it's bad for a business to make money too. It's also just like, okay, are you actually creating value for the customer in the meantime? And I do believe they are. Like, we've had this discussion in my Discord deeply because people see this as like a non-moral business, which is fair. I get it. But it's also like, if you were someone who was down on your luck, really needed some money right now, a short-term loan, it's not like a 5-year loan, just a short-term loan to get some cash so that you can make it to your next paycheck. You'd wish that you could have an interest rate at 33% and get the money rather than just not have it.
Yeah, I'll have to bite my tongue on that one. I've been fortunate enough in life to not have been in that situation, so it's hard for me to put myself in the shoes. But I totally hear you. I'm a little bit more extreme on this stuff, but very inconsistently. Like, I'll own a beer company, I'll own a cannabis company, I won't own like a tobacco company, which like makes no sense. Like, there's no logical lines on that. So I'm not trying to claim savant or like moral high ground on any of this. The Hims commercial during the Super Bowl made me feel terrible. Like, it made me feel so bad, dude. Like, you want to know what I thought after watching the Hims commercial? It was like, hey, all those big bad guys that are giving you pills, no. You don't want their pills, but our pills, yeah, you want pills from us. Like, we're the cool guys, so go take more pills. And I'm like, look, I totally get the argument on like, if someone's obese and this helps them and exercise isn't working for them. Like, look, I'm not trying to go that far into this conversation other than just to say, I'm not even sure if Hims is a value adding or value extracting or value adding company. Obviously, these things are gray area, so it could probably be argued either way. But anyways, when we were having that conversation, I thought of Hims as well, a little bit more iffy. I don't think I'd go as far as to say I think they are a value extracting business. But yeah, there were aspects of that commercial
I would agree with you. Like, I watched that commercial and they kind of called out the healthcare industry for just selling people drugs. But then at the same time, it's like, hey, we sell drugs too. You should just come buy them from us. Like, like, I actually do agree with you. I watched that commercial and I was like, I don't get the point. Like, their whole thing was like, screw pharma companies for selling drugs. But hey, we sell these same drugs for cheaper. So like, check us out.
And that was also after the Roe commercial. Like, the Roe commercial was almost like the exact same thing. Like, also around like semaglutides or whatever, like the GLP-1 drugs are. So fun stuff. Well, The good news is I the line that I draw in the sand is I never like judge people for their investments. Like, for example, if I wouldn't make an investment, let's say I decide like Go Easy is the worst company on earth, like, I'm still clinking beers with you, man. Like, I am not impacted at all by your decisions there. So
I saw a YouTube video of one person actually saying that you have to sell your soul to own Go Easy. And I was like, dude, relax. Like, just relax. Take it down a notch, okay?
Love it. All right, chat. Looks like we got 56 people in here. If anyone's got another question for us, or if you want to hear any more plans about where we're taking Stock Unlock in 2025, super happy to answer them. Probably going to start to bring us to a close here. Daniel, I'm not sure if you have any fun plans this Friday. You got anything going on?
Going out for Indian food tonight with my family. Super stoked. We found a nice Indian restaurant in Calgary, so always love going there.
Did you, me, and your mom? I'm forgetting. Did we hit Indian or did we hit Asian? Like,
that was Thai.
Or Thai. Okay, I like that spot. All right. Well, is this your first time going to that Indian spot?
No.
Oh, okay. So this is like confirmed good. What's your order? You're gonna get butter chicken again, like you did in Japan?
No, this place is more like sharing style, so you order quite a bit, and then.
Fair enough. All right, we got a couple more quick questions, so we can't take a ton of time on these. So I'm not familiar with ACHR, but I am familiar with Rocket Lab a bit. Daniel, this is one of those meme stocks that like I looked at again and was like, you know what? Like, I think that you and I wrote it off a bit too quickly. Now, don't take this the other way and interpret that as Jake is a Rocket Lab bull. But I watched a documentary on a plane ride, and the CEO of Rocket Lab was in it. And I just kind of more so it wasn't a pro Rocket Lab company story at all. It actually went through SpaceX. It was focusing on Rocket Lab, and then Astra, I think. It's like a company that came up and then died. But Yeah, like the Rocket Lab story is pretty cool. Basically, they are like a second market option to SpaceX. They're like one of the only other companies that's having a lot of successful rocket launches. The CEO has been doing it since he's been like 10 or 11 years old. The company's been slowly growing like grassroots very well, and they're actually having a ton of successful launches. They're like bringing payloads into space. If you were to have looked at the financials of this business, Daniel, like a year or two ago, for value investors like us, you kind of look at it and just scoff. It's like a $2 billion market cap business that made 30 million in revenues last year, and their costs are like 120 million. It's just like a very atypical one to look at. So I actually think I missed the boat where, like, if I looked into Rocket Lab a lot more and really understood the story when it was actually at $4 or $5, I know that's easy to say now, but I actually could see myself taking a smaller speculative position there. It has since soared to new heights. My only caution, not advice to investors there, is it is a new space. It's very hard to tell where this industry is going. And in the past, there's a lot more examples of boom bust industries than everyone gets in that on the ground floor and gets rich. So I think it's like worth looking at. The price action has been wild on it recently, and just try to keep your head on your shoulders. You probably don't know more than the other half of the market on this stuff, and that's what keeps me kind of at a pulse length distance from it. I'm not familiar with ACHR, but yeah, I just wanted to own up to that. I actually think Rocket Lab's a really cool company. I don't own the stock, but I think in hindsight, it was definitely a buy at $4 relative to where they were going. Lack of competition and the amount of innovation happening at that business.
Yeah, I'm looking at them now. They're selling for 35 times sales today.
What's their stock price right now? Like 25, 20?
23.57 as of right now.
Yeah, so this stock stayed at like a $2 billion market cap for a while. I'm not sure if it's worth screen sharing, but their stock price was around $4 for like a super, super long time. And they just kept executing. They kept getting permission to raise more money because the rockets kept working. The team kept growing. They kept meeting the guidance and milestones that they said that they would be meeting. And eventually the stock's going to respond. Like, people just kind of viewed it as a 2021er meme stock. Like, a bunch of people who own Rocket Lab are also like talking about Tesla and PLTR. Like, nothing against those businesses, but there is like a vibe towards the meme stock investor. Like, let's just call it what it is. And like, that stock was bucketed with it. Hims is actually kind of been that one too. So I think you and I, Daniel, have like cracked the ice a bit there, where it's like,
Yep.
Hey, look, if you got a big thing of apples and maybe not all of them taste good, there's probably a ripe apple somewhere in there. But
yeah, I agree. I would go as far to say I put off analyzing Hims deeply because of the crowd, just like the crowd mentality around that stock, and like some of the blatant pumping that I saw on X. I was like, if this is the type of people that are in this stock, like, I didn't really want to get involved. And then it got to a point where I was like, okay, I'm going to take a look now. Liked what I saw, dug deeper and deeper and deeper, and was like, holy crap. Yeah, no, this is actually a pretty cool, highly profitable company.
it is.
So yeah,
cool.
if I just took a look sooner, man, but it is what it is.
What was that like Chinese like drone company that you had like back in the day,
Ehang.
like pre stock unlock days?
Yeah, Ehang.
Is that still around?
I have no idea. That was part
That's
of
what I'm saying.
my
Like, it's one of those things where it's so cool. Like, you talk to your friends at a party, like, yeah, like I'm an e-hang investor. Like, I'm investing in drones like flying over Beijing and like dropping
yeah,
off like buses to people.
that was part of my 2020 to 2021 hard learning curve that I went through publicly on my channel. Not knowing the difference between speculating and investing, and that was definitely speculation. I'm very happy I got out with a profit on that one. But yeah, that is yeah.
Let's
bringing up some wounds.
Let's take a couple more of these questions here, and then we'll close. Daniel, just an ask for you. Read the question from Mitchell Vasovsky, because he is calling you out, and I think that's going to be a fun one to respond to. But while you think of a response to that, what's going on, Patrick? Great to see you. Longtime viewer. Really appreciate the support. You are also a software engineer. Let's go. I have not heard of OpenText. I just Googled them, and it looks like a Canadian software company. I'm not sure if the right one came up. They're going through absorbing a big merger. Let me know more about this. I'd like to see where your thoughts are going. And if we don't get it on the call, you can always email me, jake@stockandlock.com, and I'd love to continue the conversation there. Andrew asks, is there any way to make so that the app has, Daniel, you're going to love this, has incognito mode on the portfolio, so it will not show your value when you're checking in the gym? We literally had the same idea, and yes, we are going to do this. We're basically going to have a toggle where it goes like incognito or stealth mode, and then all you'll see is like weightings and percent gains and averages and stuff like that, but you won't see any absolute dollar amounts or like share counts, which we think is cool. It'll be easier to like share screenshots of your performance without like giving away what your underlying dollar sign holding is, just because not everyone wants to share their net worth like that, and we respect that. Daniel, do you want to take this question, or do you think this person's just trolling you? I don't think that they heard the beginning of the call when you said all you used in Asia was Grab to hail cars.
Yeah, so Mitchell said you bought Hims, a company with no moat, lol, and complaining about Uber. So I feel like that's just kind of disrespectful. Like it comes off as disrespectful to me, but I don't really care. I would just say everyone has a difference of opinions. And that's really what it comes down to. Investing is subjective. We can disagree respectfully is what I would do. And that's really all it comes down to.
We could talk about the subject matter. Like, you were not complaining about Uber. From my understanding of what you said, for someone that took the time to listen to you, you have a lot of positive things to say about Uber's business. And with thousands of stocks in the market, while you recognize it's a great company with good prospects, it's not within your circle of competency or gut feel enough that you wanted to make it a large portion of your portfolio. I think that's very different from like shitting on Uber. And yeah, like I guess agree to disagree on the Hims moat. What's funny is I actually agree with Mitchell a little bit more on the Hims moat comment than your thoughts on the moat, which I also respect. It's like a good academic conversation, so we don't have to rehash that right now. But yeah, come on, Mitchell. We're nice people. Why do you got to put us down like that, man? All right. All right, man. We've been going for close to an hour here. Really appreciate everyone hanging out. We do this once a month. Wish we could do it more. Daniel, anything else on your chest that you want to get out here while we're on the call together?
I don't think so. I think I'm good. Yeah, we've almost been going for an hour. It's funny because when Jake and I start these, we're like very busy people. And we're always like, oh yeah, I can do like 30 minutes today. And then you just get talking about stocks and it's fun. And now we're at 52 minutes. So we should probably get back to work.
Yeah, I'm going to do the at-home push-ups workout instead of going to the gym, just because there's like so many exciting things to get to. I'll riddle them off and then I'll end the call. Canadian 15-minute delayed stock quotes are coming to a stock unlock near you. We went out and we bought this data. It was more of a money problem than a coding problem. So you will be able to check your stock unlock portfolio during the day, looking at you, Daniel, if you own Canadian stocks. We are also getting closer to having much quicker financial updates on our website. There is a technical complexity in that one that I won't bore you guys with explaining, but we are very deeply looking into that. And what else is worth mentioning here? We just found out that we have prices for crypto. So for all of you that have brokerages connected to Stock Unlock, and we currently are not modeling and ignoring your Bitcoin, ETH holdings, we are going to be able to start to model that historically in our portfolio tracker and add that into your actual value, which will better show your total net worth, which is great. Again, that was more of a data issue than a time issue. So don't worry. These things actually should not take too much time in engineering land. And yeah, just say it again. Mobile apps are coming, iOS and Android. We're about to 10x our insight scores. We're going to keep our lips a little bit tight on exactly what we're doing there, just for our own IP sake. But stay tuned. 2025 is going to be awesome. Yes, quick quarterly, yearly TTM results. Likely for US companies, it's a quick auto parsing for 10K, 10Q reports. Just, I am biting my tongue on that one. We're doing everything we can, but I can't guarantee that one with 100% certainty. But we're really trying. So we feel the pain too. Trust us. What things go? Everything will be customizable in incognito mode.
Trust can be a difficult thing, and it's understandable that you feel pain around it.
Thanks, Google.
Wow.
Yeah. Anyways.
Cool.
Hi, everyone. Thanks for hanging out. Patrick, thanks for all the questions. If we're missing any, again, please send us an email. We'd love to continue the chat and see everyone next month. It'll be the spring. Hard to believe.
Yeah, can't wait.
All right.
All right.
Clicking the end stream.
Bye, everyone.